if you're looking at blocks where titles are now in the next couple of months, they're sort of rare as hen's teeth, and you need to put your foot on those and sort of get in on them when you can. So
yes, and in saying that, the pricing last year just went so rapidly on each land development and a build as well. And then in the established market was just as chaotic in terms of, median house prices moving the goalpost really quickly as well, right?
This is the Build Out West podcast with your host Tony Hyde from Evolution House and Lawn Specialists and Catherine Smith from Build Bright Builder Brokers.
If you guys are looking to build in WA or simply curious to see what's going on in building, you guys are in the right place. We're here to give insight with professionals in the game, coming to give the inside scoop. Episodes are uploaded weekly, so don't worry, we don't skip a beat and you won't either. Like, share, subscribe, sit back, relax, and let's go.
Hello and welcome to the Build Out West podcast for your host Tony Hyde
and Catherine Smith. How are we?
Good. How are you?
Good.
Look at on your shirts that we're wearing.
See that?
Because Alun's here.
Brought my mic.
Alan said that you
Alan bring us merch.
Yeah, there we are.
Freebies this time around.
that's 2XL for Tony. Looks good.
We're going to be rocking it all episode.
So you might recognise Alan from previous ones. He's lost a ton of weight though, so you might not recognise him. But well done there on that. You look great, mate.
Barely see him.
Thank you.
No, we had AV back in 2024. I think we did it on the first home buyers scheme from memory. That's what we discussed on the previous podcast. But we wanted to bring Alan back to really get into the topic of Keystart, because I feel like there's a lot more noise in 2025 for Keystart.
Yeah.
And then, breaking it down a little bit in terms of who qualifies, what are the price points now.
What it looks like going forward for people. Because right up till about now, when we're launching this, you could qualify, but just people were just like, can't do anything with it, right?
So before we go into that, Alan, just explain who you are and what you do to the people that obviously didn't watch the previous Alun Vernals Finance 365 episodes.
Yeah, cool. So look, Finance 365 was founded in March 2030, so we're just over 10 years old now. Ticking along, got 6 or 7 brokers based in Perth. Do a lot of stuff in Western Australia, Queensland, Victoria, so national. So we're across all the different schemes, all the entitlements, but main forte in what we play in is construction finance. So we do established finance, we do refinances for existing clients, etc. But majority of our leads are construction finance. So that's our sort of sweet spot. It's what we play in, and we like to think that's what we're experts in.
And I feel like that's incredibly important to highlight, because so many of our clients come to us and they're like, I've already got a broker and things like that. And I said, but do they understand construction finance? Because, there's things with progress payments and the rest of it, it's not in a similar field as established. And a lot of mortgage brokers are a lot more comfortable in the established market rather than construction loans and things like that.
We spoke about this before, like make sure that you're pre-approved and not just on an LOE, because that doesn't float with land developers and blah, 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 all that nonsense, right?
And there's been a lot of change, in terms of land developers and such going, wanting to do 2 loans. So obviously, I work with Alan a fair bit, and we've had to, do 2-part loans to get it along the line, because, land developers are very strict. I think that's easing, hopefully, for 2025.
Yeah, I think so. Look, we've lots of delayed titles for last year. Started in sort of November, December to see titles that were sort of August, September for 2025. Yeah. So, you're looking at that going, that's a long way away, and that's your pipeline of work, and that's essentially where the business makes its money. So you're pushing that pipeline away. So, you're literally going, okay, cool. So that tells you that the market's being hot. There's not a lot of land left. So if you're looking at blocks where titles are now in the next couple of months, they're sort of rare as hen's teeth, and you need to put your foot on those and sort of get in on them when you can. So we're not seeing a massive amount of them, but they do come back on the market. Finance fallovers occasionally, so it's just about sitting close to your land agent, and whenever they become available, managing to grab one that's out there, but just not easy. So then changes to all the different schemes in terms of limits and all that type of stuff, and income limits, package limits. Just means that what you look like 6 months ago, 8 months ago, you probably don't look like today. So it's good to get double checked again and make sure you're still in the same ballpark.
Yes, and in saying that, the pricing last year just went so rapidly on each land development and a build as well. And then in the established market was just as chaotic in terms of, median house prices moving the goalpost really quickly as well, right? But anyway, so today we're talking about Keystart. We actually didn't do too much on Keystart last year, to be fair, because I think it just wasn't a viable option for a lot of people in terms of...
Wasn't in the game, was it?
Yeah, just the borrowing capacity on it and things like that, where it sat in the market. But there's been some changes. So we thought, you can go through the major changes and sort of what you think will suit a Keystart client.
I think we could just touch on what Keystart is, then, because some people might not know what it is. Like, there's a lot of myths around what it used to be and what it is now. If that'd be all right, Al.
Yeah, exactly. So, literally funded by the West Australian Treasury, so on the WA balance sheet. So, affects everything that we do in this particular state. Mission statement is to literally get people into the first affordable home. It's always been entry level, so it's never been aimed at people earning too much income. It's always been aimed at the bottom part of the market and the
first home buyer market.
Yeah, first home buyer market, pretty much 80% first home buyer market. We actually forget how powerful it is for second home buyers, because it's 98% with no mortgage insurance, and for second home buyers have to pay stamp duty. It's still a reduced deposit compared to bank lending. Traditionally, it's always had a higher interest rate, but that's been the margin that you've had to pay for not paying mortgage insurance, which obviously is about 3.5% on high LVR type deals.
Okay.
But yeah, they've been a major player now for 20 plus years, and if you work within construction finance, you usually got your platinum accreditation, so you get your deals assessed quicker and stuff like that. But the reality is it's a really niche product, and you need to understand what you're doing, because you can kill a deal by submitting it incorrectly every single time. They're making it slightly easier now. They're referencing the credit files. They're making sure that you don't have to send too many statements, etc. So they are working on their process as well, because stuff that used to kill deals in the past, you don't really need to see anymore. It's actually on the credit file. So yeah, they are getting easier. They are looking at how to do more deals rather than the other way around.
Do you think their message is more, we're open for business, we're ready to
they are
use
absolutely
visa?
Yeah, so look, they've probably the biggest move recently is in the tiers of the package price. Go back 2 years, their threshold was 560,000, which suited the market at that particular point. Market moved really, really quickly, so they moved up to 650. And then at 650, that was sort of right in the middle of, the market sort of taking off. And before you know it, 650 was a struggle, and we're now at 730. So in discussions with Keystart recently, and the information that they sent to us and the BDM updates and all the things that we get from them, they've positioned 730 at the median house price in Perth. So they don't want to miss the market again. They don't want it to be a sort of a launch where it's launching at nothing.
Okay.
And it's a really meaningful fork in the road where they're saying, well, the median house price is that, we can do it. Now, the relevance to that and why we think in 2025 it's going to be one of our sort of premier products is the first home buyers scheme, which is the new homes guarantee, taps out at 600,000, and there's nothing on the horizon to say in WA that's going to move. So,
okay,
your 600k for WA, your 700 in Queensland, your 800 in Victoria. But there's no sign of any of those moving in any of those states and territories. So,
and they'll almost be redundant in all those states, because their
exactly
house prices
exactly. So Queensland, you're at 800 and it's at 700, and Melbourne, to do 4x2, you're at 900, 950 in the areas that are sort of gun areas. So it's a really interesting one that the scheme is sort of dated. Keystart have obviously looked at that from a management point of view and said, well, let's not have another update and then it becomes dated in 6 months.
It's like they just went, let's just pump the brakes and let's let the market almost not plateau, but just slow, because it slowed a little bit. It's not like then go, right, let's throw something that's actually going to work. I mean, they tried to get there with the 650 and it worked for about 38 seconds. That might be a bit too long, how long it lasted for, And that's not on them. They just tried to react to it, and it was so quick last year, right?
Yeah, look, it was, and it just went past them really, really quickly. And I guess after COVID, really busy, they employed a lot of assessors. They got a lot of staff, a lot of overheads. They sort of really boosted production essentially to get all those houses off the ground, which everyone did. Yeah, we all sort of grew the footprint of the business at that particular point. Now they sort of scaled it back a little bit, but they understand there's a need for 730 being where you're actually able to do this. So they've made a few other small changes. Income that you can actually earn, obviously, as the price gets more expensive, you need to earn more money to substantiate that loan. So families now, couples and families, 206,000 was previous. That's now 218,000.
Sorry.
So as a household income, 218,000 for couples or families. So that covers quite a lot of what we see. If you're FIFO and earning quite a lot of money, what they basically say is the scheme shouldn't be for you anyway at Keystart. You should be trying to save 5% and doing bank lending. They've always called themselves a transitional lender, so they're happy to lend you the money, but they're probably the only bank in the whole of Australia that say, please, can you refinance when you have the first available opportunity so we can lend the money to someone else, which in bank world doesn't really make a lot of sense. Every bank wants to keep money on their book for as long as possible. But Keystart, purely transitional,
And that-
and get out. And
And that was where the catch was, because they weren't a bank sort of thing, right? But now they're almost operating like a bank at the start with the lending part, and then saying get rid of it. Yeah, which is where I feel like it's aligned with how the banks lend, and that's a good thing.
if you had a perfect deal, you'd use Keystart Finance, you build your house and land package, you pay a little bit off over a year or two, reduce the balance, house would increase in value, and we'd refinance it out to a bank at low sixes.
Yeah.
Low 6.1,
We were seeing
that's the best world.
we were seeing that through that when the COVID and all that hit. The time the house was built, 12 months later, they had enough money to refinance as soon as they got their keys, like immediately.
Yeah.
It
And
was
those people
crazy.
really won.
Yeah, like hundred. It was like
It's a Keystart.
there was hundreds of thousands of dollars that were going up as well. Like
Yes.
it's huge dollars.
But I think from a Keystart perspective, they didn't have anyone to replace them because, it just didn't really make any sense all last year.
Yeah, that's it. Look, they made some small changes in the background, which they probably don't get enough. It's not such a big announcement, but just things like changing the repayment during construction at $400 a week because people are renting in their own environments, and then they come in and they've got to pay sort of full repayments on their home loan all the way through. That was the old rule, and they've gone back to that $400 a week. That's a month, which is $400 a evening. Which obviously makes sense. So what they're basically saying is, we know you're renting, we know it's expensive now because that's gone through the roof, which is why everyone's building it.
So it's about $100 a week, roughly.
Per week. So per month they've made that, and it just makes perfect sense. So it just means that people can continue to have their existing facility set up for rent, keep paying that, and it's only a small amount.
And the rent plus that 100, right, is almost what their mortgage would kind of be, and it gets them used to paying that mortgage rate, right? Yeah, that was what it used to be. It's smart, right?
In case you don't really understand, is you generally have progress payments that increase during your build timeframe. So what Alan's saying is, you sort of, instead of having that increase with your interest rate going high, you just have a flat fee of $100 a week during your build timeframe, and that sort of allows clients also to budget for that as well, because they're not having that slow increase as their build goes. It's just a stagnant amount that they can sort of foresee what it's going to be, and it's a little bit of an easier transaction. Yeah
Pretty much. I mean, the other way to look at it is it was putting too much pressure on what traditionally has been entry-level clients that use Keystart to do it. So they're renting, paying $400 a week this week, and then that's gone up to $650 over a period of time, and then they're paying similar amount in mortgage repayment. So it was just too stressful. We're getting to the end, you got people that are sort of stressed to the max, and then just go, I'm going to sell my house at the end. I'm so stressed out about this, I'd rather go back to renting. And it's like, well, that's not, you've done the hard part, keep your house.
It's not the intention.
So we don't want to damage your credit file by missing repayments on your home loan or stuff. So it makes sense. It's not a product that essentially is meant to do that, put people under pressure. And traditionally with a 2% deposit with no mortgage insurance, it's a minimal deposit in anyway. So the time frame between when we can actually sit down with you, assess your situation, and actually lodge the deal is a whole lot quicker than going away and saving 5%.
And it comes away from that, it's not actually to make the government money, it's to support, right? Whereas like when it was charging that money, you're like, oh no, why he's making it? Like, I get they're going to make a little bit, but again, it's not there to make. So it's not that's where it stops being a bank, like it's not there for making money. It's not there to get you refinanced back with them, at a different rate. So
that's it. And look, they're a lot easier to use than they've ever been. And that's not a detrimental thing to say about Keystart. It's just, but because it's been that entry-level product for so long, the clarifications and the paperwork, support documentation you need, you've got to tick every box. After you've ticked every box, they go back and double-check every box again. So, something might happen through a 6-month process of building your house in the week before you're due to get your formal approval, and they'll just put it on ice until they understand fully what implication that has on your budget again. Whereas someone, like a Westpac, they'll make a credit and something on it. They'll say, happy AIP done, you're pre-approved, and then they won't look at it again. They'll just do the valuation, and it just goes formal. Doesn't have to go back through that rehabilitation of getting some new bank statements, re-looking at them again, and the clients have spent too much money this month, the living expenses are too high, etc. So they're becoming a lot easier to work with in those types of things because the paperwork's less and less. So it's a lot easier than it's ever been.
Without going too micro, in terms of the borrowing capacity, the family income of $218,000, does that take into account any sort of Centrelink payments or anything like this? Or is it just simply wages?
Yeah, look, wages, but they scale Centrelink to whatever your income is. So when you put the income into the actual servicing calculator and you put the age of the children in, it gives you a rough guide of what they should be claiming for Centrelink anyway. So even if your clients don't know what their Centrelink income is, you can get quite a good indication of what it should be just based on that anyway.
Okay.
As you get to the higher incomes, obviously the Centrelink income, Part A, Part B, that all sort of drops off anyway.
Yeah.
So, unless you've got really 4 or 5 kids and it's a large family, so it's pretty much, we don't see too much of it anymore.
Okay.
Whereas two incomes of 50, 60K, we used to see 5-6 years ago, 100K income with 3 kids, you get Centrelink Part A, Part B every time.
Yeah.
And it was a consideration. Then we had things like, when the kids are 12, you get 100% of it, but as soon as they turn 14, you only get 50%. And then on day one, they were 13, and then 6 months in, they turn 14, and you lose $150 a fortnight because the kid goes to 14. Now, the clients are still receiving the money in exactly the same format. It's just what goes in the service calculated in the back, but then bill doesn't work. But we've been working with you for 6 months to try and get it over the line. So the fact they've made their processes better takes all that kind of stuff off the table.
Right,
so you're not having those really bad outcomes. And customer outcomes now is a really big thing for any lender after the Royal Commission. The buzzword is customer outcome. Why are we putting these guys into hardship with rent repayments? It just doesn't make sense.
So I think there's a lot of noise about them increasing the borrowing capacity to about 730. You've obviously done a few calculations already this year. Would you say what would be the average once you actually calculate people can borrow through Keystart on what you've seen come through? Obviously, everyone's different.
Yeah, we're sort of mid-60s. To sevens, that's where most of them sort of bounce out to. Obviously, incomes have grown with the price growth as well. So, people are getting 3% income rises, 4% income rises as well. So it isn't just that the incomes are static.
Yes.
There's a margin built in on top of your interest rate of sort of 2 to 3% with all the lenders. So it doesn't mean if you've got $1 spare that's all you can borrow with the lender. It's that plus the 3% margin built in. So lending's still quite comfortable for the lenders. They're happy with the margins they got built in. APRA met prior to Christmas and said we're keeping them at 3% for all the lenders, all the banks. So, there's still a good margin built in there. There is room for the borrowing capacities to grow next year. So if rates come down, we can get you more money.
Yeah.
And then if they change the buffer or the serviceability buffer, we can then probably get more money again next year. So there's some things that are indicators that we've seen before, post sort of GFC, etc. The same sort of levers are there to pull now, and you're looking at Keystart now going, well, between 600 where the scheme's finished, the new homes guarantee scheme, that's finished, and between 730 where the median house price is, that's a sweet spot now that nobody else plays in. So 98% lending, no mortgage insurance, decent interest rates, sort of 7.85 where, go back a couple of years ago, they were sort of 8s to 9s, they were doing all right, and it was hard to sell and no one really wanted it. People can see the value now in saying, well, let's do that transition of 2 years, build a home, get some equity, pay some money off it, and we'll go from there.
Yeah. I think particularly though with Keystart, in terms of serviceability, you have to really do that first before even starting to look into house and land and all the rest of it. Because I think what happens is people go 730 and they think that that's what they can borrow. And that's why I asked you that before, because, you're saying most people actually end up falling around the mid-6 range. And that is very common where people think, 730 is what I can borrow. They have probably, not realistic expectations on that. And so that's why you need to talk to, obviously, a construction loan mortgage broker beforehand to really know exactly what you're looking for and then work backwards on that.
Yeah, absolutely. I mean, the most important part there is to calculate the changes every 1 or 2 months with the HEM figure anyway, which is the best guess of what the family of two kids, 2 adults, they give us a figure of what that HEM figure should be. And your borrowing capacity is at the judgment of somebody else, not you, essentially. So, then we analyse the bank statements and work out what the living expenses are. And sometimes it's like, guys, you need to go away. You need to stop spending money on all these random things. Take all the random events off the pay slips, tidy them up. The impact of what all that means for when a bank looks at the deal, which is standard practice now. So clients should be aware of that. I think most are. I don't think they're not highly educated, but most have an idea now what sort of goes into it. There's a good level of information out there just for anyone surfing on the internet. So I don't think they come in like they used to 20 years ago, completely green, no idea what Keystart is, haven't done it. But with Keystart service calc, it's always just a little bit different. I think we're on version 1.82 now, and it was like just before Christmas we were 1.79, so it's changed 3 times in a couple of months with various things. And bearing in mind, if it's an income change, they'll change the calculator. But it's a set calculator where we put the information in. It has a number that tells us where it sort of ranks, and that if you qualify someone 6 months ago, you'll need to go back and do it again because the calculator numbers would have changed, which can mean a difference of up and down.
It's certainly, you said, it's industry standard now. I feel is, back of the cigarette packet. It's not worth doing anymore. Do it properly. Spend the time, because you just don't know. I wouldn't, if anyone says, you can borrow this, if you've not been a mortgage broker or the bank or something, just don't take anyone's word for it. Go and get it done properly. It's just not worth it wasting
We
the
try
time.
and get every client in for 20 minutes to half an hour to run the numbers. We literally show them 98% lending, 97% lending, 95%. Show them the different lenders in that.
Yeah.
Show them Keystart. And like everything, if they don't get the information on the front end, they can't make an informed decision whether it's right for them. So we do that with pretty much every client, and that 20 minutes, half an hour, sometimes they go an hour, you get bogged down on a few numbers here and there, and repayments and stuff like that, and progress payments and all the stuff we need to sort of cover off. But our clients literally leave and they know everything about construction finance. So it's no cost, no obligation. We don't sort of charge for the first go, if you like. But all our leads come through building partners. So we're not out there sort of trying to get people off sort of Facebook or Instagram.
But I think that's important, because a lot of the times, we've had it so many times over the years, someone will come to me and then I say, I want you to go talk to Alan, go and do your finance. And then Alan will call me afterwards. He goes, they got a 60 grand car loan. And I said, no, they didn't tell me, but they feel a little bit more comfortable exposing, everything in terms of their financial situation to you, rather than someone, more on the build side, because, for whatever reason, that makes more sense. And a lot of the time, it's like, that's why.
It's usually first line. They walk in the office and they can't wait to tell you.
Yeah, that's because obviously I have the Keystart calculator and I would do it and I go, it's roughly going to be this. But then obviously I haven't seen a few cobwebs in the cupboard. That obviously that's where you kind of go through them in a more thorough way.
The process for us there is key. So we go back to credit checks. We try and get all them done in that appointment, print everything out, run through it, make sure there's no defaults, nothing that we can't cover off on. Keystart are quite good with defaults if they're paid and they're up to date, no drama at all. More than a year ago, and the $5 grand's not an issue. Jesus, so that's a real powerful niche. So sometimes people just don't think they qualify because they got a default. So Keystart's actually the other way, where they can actually work with you. So we've done clients with Keystart. They're actually in a Part 9. They're in a bankruptcy act. Because the repayments actually fit in the calculator and they've been running for more than 2 years, Keystart said, well, they've kind of rehabilitated anyway. The trick to that is the minute they pay out the Part 9, it's then 2 years we have to wait, because that's the last payment of the Part 9 and they can't see anything anymore. So Keystart will do it whilst in bankruptcy, but if you just come out of bankruptcy, it's another 2 years from that particular point, which kind of makes sense, kind of doesn't. But the reality is you can actually help people when they're starting to rehabilitate themselves. They get everything back onto a Part 9 and get themselves running again, and you can actually still help them. So
better than the other way we used to do it. The other way we used to do it, right? Get it removed and then wait 3 months.
Yeah, look, they're still out there. There's a market for that. There's a lot of stuff that goes on credit files that shouldn't go on. There's a lot of lenders that do multiple inquiries for one car loan. You go see a car financier and they do 5 credit checks for 5 different mobs, and your credit score's blown apart because of that. What I probably would say about the credit files is they're more intuitive than they've ever been with the new VEDA 1 score, which was the old comprehensive credit reporting's finished. And whenever you look at comprehensive reporting, score might be 650. And then you look at the 1 score and it's like 430, 450. So Keystart now, you have to be over 400 to get in there.
Okay.
So it's just got to be a score that's rehabilitating itself.
Just sounds like everyone's just like they're addressing all the issues that would stop people that just because they missed a mobile phone payment, and like there's used to stuff people. The mobile phone payment, like, it was because I changed lenders and they just stick you straight on, or you've moved house and you'd be like, geez, if you can discuss it away, then it's easy, right?
Look, I think if you don't know, just ask. Is probably the greatest takeaways. There's loads of scenarios where people have come in with bad advice or different advice, and you come in and sit down. So that's not quite the case anymore. It's sort of changed. The Filipino barbecue is the biggest killer in finance because the guys just talk to each other and it's fantastic. And we got thousands of clients with those guys, but you get a million referrals, but there's always one that will just have the story a little bit off. And then when you sit down and just run through the numbers and draw it up again for them, they go, all right, okay, cool, I understand it again now.
Yeah. So I think for 2025, the message is Keystart is back. You've noticed that a lot with a few of the major project builders already advertising it. Pushing that, because that really aligns with that first home buyer market and project builder space. So if you are interested in building and using Keystart, please hit up Alun. He's very knowledgeable in this area, and we've done a lot of Keystart deals over the years.
Bit more confidence in the median house price kind of staying for a few while as well, which is going to really benefit using Keystart. I think that's I think we've seen that. We're trying to see.
The first step is really just to talk to someone like Alun that really knows this space, and then you can make an informed decision from there.
Yeah, absolutely.
Yeah.
No problem.
Alrighty.
Well, thanks again for coming on, and we'll once again we'll have you on in a few months to talk about something else, maybe interest rates, hopefully. Yeah, true. The most exciting stuff.
Yeah.
Well, thanks everyone again. Like, share, follow, comment, all the good stuff, and we'll speak to you soon.
Bye.
This is the Build Out West podcast with your host Tony Hyde from Evolution House and Land Specialists and Catherine Smith from Build Bright Builder Brokers.
If you guys are looking to build in WA or simply curious to see what's going on in building, you guys are in the right place. We're here to give insight with professionals in the game, coming to give the inside scoop. Episodes are uploaded weekly, so don't worry, we don't skip a beat and you won't either. Like, share, subscribe, sit back, relax, and let's go.